And so we're in that mode for gold. We're not in anything in the FOMO mode yet. The banks are the main buyers. The East are still the main buyers. But as the dollar degrades more and more and the bond market has more and more trouble, and perhaps interest rates come down for a while and have to go back up due to inflationary pressures, or maybe the market itself, I think you'll get that next, let's say, new buying into gold. Interestingly, we've gone up tenfold in 2.5 decades and approximately 25 years. But at the end of the great inflations, you get an acceleration, and that's where we're at. We are starting, I'm pretty certain, the last phase up, which means you get the biggest move percentage-wise in a rather short amount of time.
Gold prices are making headlines yet again this week after breaking through the $2,600 per ounce barrier, marking a new all-time high for the precious metal. This latest price milestone is another chapter in gold's impressive rally, which has led the precious metal to consistently outperform expectations since the start of the year. Prices of the safe haven asset have climbed 27% in 2024, their biggest annual rise since 2010, as investors also sought to hedge uncertainties spurred by prolonged conflicts in the Middle East and elsewhere. Even though all the signs point upwards, the rally of the golden metal seems overextended, opening the door for a pullback before aiming to new record highs. Silver expert David Morgan contemplates the recent ascent of gold prices, projecting even greater valuations grounded in historical trends and the current market landscape. In the face of rising geopolitical tensions, he highlights how uncertainty typically compels investors to gravitate toward precious metals, further solidifying their reputation as safe havens. At that time, predicting that gold would reach $2,500 seemed far-fetched, yet Morgan asserts he did the math to determine that this was the fair value. The world of investing has recently seen waves of excitement and anxiety as the price of gold surges to unprecedented heights, sparking interest among investors and impacting stock markets globally. This uptick, largely fueled by inflationary fears and uncertainties surrounding the global economy, has left many wondering how best to navigate this fluctuating terrain of precious metal investments. Over the past 25 years, gold has risen tenfold, and Morgan believes we are entering the final phase of a major inflationary cycle characterized by rapid price increases. He adds that discussions around $3,000 in gold by institutions like Bank of America can help push the market further upward. Morgan explains that new highs in gold prices instill confidence in investors, leading to a tight market where holders are reluctant to sell. Let's jump into the video for more details. If you like what you see, please thumbs up and subscribe to our channel to stay updated with our latest content.
Well, I'm very happy at 2,600. And of course, I think we have much more to go. No one knows the ultimate top. I mean, I got into the, financial newsletter business right at pretty much the beginning. I mean, gold was at 252 in the year 2000. We started about 99. If you would have said gold's going to 2,500 back then, you looked like a bit of a kook. And I actually said it would. In fact, I said the fair price for gold, not undervalued, not overvalued, but fair valued was $2,500. And I did that math. It's very, very simple. You take the amount of base money and you divide it by dollars per ounce, the amount of ounces that the Treasury purportedly has in Fort Knox, that gives you a number, and that number is 2,500. Today, Jim Rickards has done the same exact arithmetic. It's just a division problem, and it is around 27,000. So interestingly, we've gone up tenfold in 2.5 decades and approximately 25 years. But at the end of the great inflations, you get an acceleration, and that's where we're at. We are starting, I'm pretty certain, the last phase up, which means you get the biggest move percentage-wise in a rather short amount of time. I mean, it's actually Jeff Christian that said it the first time, that said 90% of the move comes in the last 10% of the time. I don't think Jeff has said that for 10 or 15 years, but I've said it many times, and it doesn't guarantee it's exactly that, but it gives people the idea, not just in the metals markets. You see an acceleration in many markets. It's the FOMO, the fear of missing out, and oh my goodness, I got to get into real estate. I can't buy houses, I'll buy real estate investment trusts, and on it goes. So we are now making new highs, and when you make a new high, it gives everybody confidence. So people that own gold probably won't sell because they're expecting another new high. So the float gets very tight. People don't want to sell. So if you only have new buyers, that adds to the price, which does what? Makes another new high. And so we're in that mode for gold. We're not in anything in the FOMO mode yet. The banks are the main buyers. The East are still the main buyers. But as the dollar degrades more and more and the bond market has more and more trouble, and perhaps interest rates come down for a while and have to go back up due to inflationary pressures, or maybe the market itself, I think you'll get that next, let's say, new buying into gold that we will see. I just don't know when. And this is what pushes the market higher because you need new buyers in any market. And you only have such a base has conviction that's going to save in gold or stack silver, and that's great. And that market grows slightly. But the real new market is what you want, where people wake up and say, you know what, I have a 401k, but I don't have any gold in my portfolio. And I know from Mr. Morgan and many others that everybody should have at least a 10% exposure to the metal. You know, I'm going to do this with this, this money or my savings or whatever.
The silver market has been characterized by significant price fluctuations in recent years, catching the attention of investors and traders alike. Historically, silver has experienced dramatic price spikes, with its all-time high reaching approximately $50 per ounce in 1980 and again in 2011. These historical peaks serve as benchmarks for silver enthusiasts who believe the metal is poised for another significant rally. Recently, silver price retreats after hitting a two-month high of $31.43, falls over 1.50%. Reflecting on his earlier predictions, Morgan mentions that in his January forecast, he projected gold would reach $2,500 and silver would exceed $30. Now, with silver approaching those levels, he suggests an upward revision. He anticipates that silver will surpass $33 and could reach around $35, potentially pushing toward $40. He concludes by underscoring that the trajectory of silver will heavily depend on geopolitical factors and developments in the financial markets, which could further influence its rise. Let's now turn our attention to the video again.
I think silver's a tougher one to analyze for anyone. That's how I see it. And silver's done well this year. It's on par, slightly ahead of gold, depending what weekly close we look at. But what I do think is that technically it's at almost a breakout point. We're pushing almost 32 today as we do the interview. I know you like to keep kind of evergreen, but that's a fact. And 33 is about the limit where we have some resistance. After that, there's very little resistance. So we could go from, say, 33 handle to 43 handle relatively quickly because, like gold, it wouldn't be making a new high. It would be making a new high over the last, 15 years or whatever it's been, but it wouldn't be making a new high from an all-time high perspective. But the point is that in both cases, there's very little resistance to the upside. Gold, there's none because it's never been this price before. With silver, there's some, but it's so little it almost doesn't exist. So that means all the people that own it at 33 have finally got there. Maybe they bought it at that, back in 2011, are holding it now. They've held this long. Why not hold longer? So again, it tightens up the market, new buying. And silver is such a small market, and you got this constant demand on silver that you don't have in gold. And that is the industrial demand just is a steady eddy, and it keeps growing year over year, and it won't go away because silver is in such need as a technological metal. And with the green energy push, there's a demand that it could ebb and flow. But really, the projections are for it to just keep increasing. So I do think by the end of the year, I said in the January issue, which I'm almost obligated to do, what do I think for the prices of gold and silver this year? I said $2,500 gold. Well, we're past that. And I said $30 plus silver, And really, when I wrote that, I've been beaten up so many times in this market and leaning toward the conservative side. I mean, when you look at where silver started, a $30 call was a big call. I mean, that was, almost extreme. But now to revamp it here in September, I think that will be above 33, will be to 40. I don't know. I'll call 35. I think we could get a 35 handle. We'll be there for 1 day, 1 week, or 1 month to push up to 40. I don't know. Once we get above 33, what I do know is it will accelerate. Maybe not the next week or two, or maybe it won't even be a month, maybe 2 months. And, people will get on your comments and say, that Morgan, he doesn't know what he's talking about. we're 3 months or 2 months past 33 and we're, trading between 30 and 33. What the heck was he talking about? But once it gets going and establishes above 33, and it won't take long, it'll go. I don't think it'd take a couple months. I think it will really move. And then we're going to have to find out where the market clears. The stale longs that bought it 30 and now it's at 40. Oh, I'm done with silver. I bought too much. I don't like it. I'm getting my money back. I want to do this with my money, whatever. So there will be some of that. But once that clears, then we could really accelerate, especially depending on what goes on geopolitically, politically, and in the financial markets.
With gold historically regarded as a safe haven during turbulent times, the current landscape reflects this trend. In 2024, gold has experienced a remarkable surge, consistently reaching record highs and recently surpassing $2,600 per ounce for the first time ever. This unprecedented rise followed the Federal Reserve's surprise decision to implement a 50 basis point rate cut, leading to speculation that gold could hit the $3,000 mark next year. Meanwhile, silver, though less popular than gold, has served as a reliable store of value and medium of exchange throughout history. Traders may turn to silver to diversify their investment portfolios, appreciate its intrinsic value, or use it as a potential hedge against high inflation. Do you believe that gold and silver can maintain their status as safe havens in the current economic climate? Drop your comments below and let us know what you think. If you found this video helpful, please like it and subscribe for more. We're grateful to have you with us on this journey.